Hello traders, welcome to your daily market update for Friday, the 29th of May 2015. It's the last trading day of May and it's the last trading day of the week. And we finished last night's session in an interesting fashion where we had European data that wasn't too bad at all. We did get some pound GDP figures that wasn't impressive enough to support the pound, and we've seen the pound sell off quite aggressively in the Euro session. It was supported in the US session, but the US data wasn't too bad. We did see initial jobless claims and continuing jobless claims not quite perform as well as everyone would have liked, but it's still showing that the job market is quite healthy, and we've seen a very nice tick up in home sales. But all that was not good enough to push the US dollar beyond the 15-year highs on the US dollar versus the Japanese yen, and we did see a pullback. So let's get into today's activity before I go to the charts, and we'll have a look at that price action. Today we have retail sales out. We have a little bit of data across the board in the European session. But the real focus of today is going to be in the US session, where everybody has a look at GDP for Q1. It is expected to be negative 0.8. However, the market's interpretation of this news is going to be the interesting factor, because the Fed has already said that they believe the Q1 data was transitory and they're not too worried about it. And in the future, we should see a tick up. So I think the number itself isn't going to be the important factor, but what the outlook looks for Q2's GDP and growth for the economy. If it does look like we're going to see a tick up, that could add some support back into the US dollar. However, if not, we could see the pullback currently underway extend just a little bit further. We do have some GDP coming out for Canada. We have CPI coming out for the US, and that should round out the week in terms of data. Let's have a look at the US dollar index, and you can see that I'll move away from the 1 hour. You can see on the daily chart here that we have had a pullback yesterday, and that has led to a little bit of weakness in the end of the session. I did mention that we had an indecision candle here and potentially looked like we were getting a stall. I didn't think that was going to be the case in the European session, as we did push higher, but then we end up closing the day on the daily, very close to the daily lows. We could extend that pullback if we see GDP figures not quite impress the market. We'll see how the day rolls out, and we will now move to the charts and see. You can see here that the New Zealand versus the US has broken through multi-month lows. So the lows of February and March have been taken out and extending the losses, as the market is now speculating further interest rate cuts coming from the economy. Even the recent falls in the US dollar weren't able to support the pair, and we've seen continuing slides throughout the Asian session as well. The Australian dollar also sold off quite heavily yesterday. We're seeing right now just a little bit of support, but I think that is just purely on the back of the US dollar weakness, and any further speculation on further interest rate cuts for Australia would push the Australian dollar back down towards 75.5 cents. The support in April, if once broken, should continue to head much lower. If I go out to let me see, we've got next support down here at 71 cents that I've highlighted here on the weekly chart if we do get a break of those lows. The Great British Pound, it finished the day not too bad after what was quite aggressive sell-off, and you can see it's having a bit of a bounce now on the back of the US dollar weakness. If I go to a 4-hourly chart, well, let's go to a 1-hourly chart, and you can see the sell-off in the European session was quite heavy, and then we've just been grinding our way back higher as the US dollar weakness kicked in. We could continue to see the falls carry on and with trend and momentum, making lower swing highs if we do get the GDP forecast for the US being not too bad looking forward. The euro, however, has bounced, as you can see here on the daily chart. We did bounce off 109, and we are now making a run towards $1.10, I should say. And I'm really interested to keep an eye here on $1.10.4, as we can see here that the triple top may offer resistance, as we are getting a pullback from what has been a pretty impressive fall in recent sessions. So a healthy pullback, and looking for levels of resistance before I get in and short the euro once again. US dollar versus the Canadian dollar faded away quite heavily as we've seen oil supported on the back of the additional drawdown on oil supply and the US dollar weakness. So we have got ourselves a very handy candle formation here, being a hammer formation, indicating that we're going to see some further falls. I'm going to be keeping my eye on support levels at $1.24 even, but I think that if that gets broken, we could be moving to $1.23.5. We will keep an eye on that level and see how it rolls throughout the session and see exactly how much further the US dollar can keep falling. The US dollar versus the Japanese yen did take out 15-year highs at 124. However, we did flame out at that area, and it looks like we do want to move a little bit lower. So I'll be keeping an eye on the US dollar versus the Japanese yen as we get the GDP figures during the US session, as the figure may disappoint and create the US dollar pullback to continue. And the only thing that will probably have the opportunity of supporting the US dollar will be any signs of future forecasts being improving in Q2. So everybody should start looking towards Q2 after this data drop, and if it does look like it is going to be one that we could experience growth, well then I'm sure the US dollar will be supported at some point. Well, that's it from me this week and this month. I'll be back again on Monday. So great trading today. Hopefully we can pick up some more pips to finish out the week and the month. Have a great weekend, and until then, trade well.